Hello, welcome to today's webinar. In today's webinar, I'm going to be taking us through the concept behind technical analysis. Technical analysis is one of those analyses we do in Forex in order to make our entry and to come out profitable. So the big question is, what is technical analysis? You see, the idea behind technical analysis is simple, is that you cannot be able to make a predictable price action movement without combining the concept of technical analysis to come out with a trade idea. So what is this technical analysis? Technical analysis, I would want to say that is the study of the past event of the market, the current event, that's the present event of the market, in order to predict the future event of the market. So technical analysis is just that analysis that has to do with you checking into the history and then looking at what the history is saying that coincide with the momentary movement of price on the market, and then using that idea to predict the possible move of the market in the nearest future. I always tell my team that the nearest future could be in the next 10, in the next 1 hour, in the next 2 hours, in the next 3 hours, the next 10 hours, in the next 2 days, in the next 1 week, in the next 1 month. So that's the concept behind technical analysis. And in today's video, I'm just going to concise the content on candlestick chart, trending market, and support and resistance. So we're just going to look at the concept behind candlestick chart, trending market, and support and what? Resistance. So what is the idea behind candlestick? So let me just move a little bit away from this candlestick so that we can be able, from this particular chart, so that we can be able to nose dive into the content for today. So candlestick is part of the representation of the movement of price in the market, part of what price is printed on the market space. There are different forms of symbols we use to represent the movement of price in the market. We could use either candlestick, we could use bar. I think from my previous content, I explained from my previous video, you can go to a video where I talked about how to use TradingView, how to register, create an account with TradingView, and how to use the interface of TradingView. I made content on that. So quickly, let's just delve into, sorry, please. So quickly, let's just delve into the idea behind candlestick and see how we can be able to make reasonable knowledge from there. So let me just write out some. So now this particular market, okay, this particular market is represented on candlestick. Let me just use this first. This particular market is represented on candlestick. Now each candlestick is formed based on the time frame that the market is being charted on. This market currently, this particular market of GBP JPY is currently on the 1 hour time frame. So it means that this particular candle is formed within an hour. If this market, if I take it to 15-minute time frame, say this, it means each of these candles is formed within 15 minutes, right? So this is just basic knowledge. So let me take it back to the 1 hour time frame. So if you look at the chart, we have green candle, we have red candle. Based on the settings, it is set that I set it in such a way that my green candle should represent a bullish move. A bullish move simply means buyers taking over the market. So my sorry, please. So anywhere I see the green candle, what that is telling me in the sense is that these is the actions of buyers coming to the market, because the whole concept behind the financial market is the constant activities between buyers and sellers. So just as your normal market, you have people buying and selling commodities. So these are people's activity on this market. Buyers coming to come and engage the market, and then sellers coming to come and engage the market. So whenever buyers come to engage the market, you realize that the candle is printed green. These are the activities of buyers, taking it green, 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 green up. And these are the activities of sellers. You have red, red, down to this place. So whenever buyers take over the market, it takes it on a green candlestick. Whenever sellers take in the market, they take it on a red candlestick. So whenever you hear traders saying that the market is currently bullish, what they're trying to say in essence is that buyers are taking over the market. But when they say the market is bearish, they say sellers are taking over the market. And that is based on the activities of the candlestick. So you realize that during a bullish move, you have green candles printed more than red candles, right? So I'll explain more on that when we come to trend line, when we come to trend market trend. So let me just pick out some few stuff. Let me just pick out some few stuff to explain certain things. All right. So take for instance, I want to draw, if you have a market in this, if you have a candle in this format, right? Okay. I should have made this thing red earlier. So let's assume this is a red candle, right? So because I didn't do this earlier, I'm just trying to, so let's assume this is a red candle. On this candle, what this candle represents basically is that so this is a bearish candle, if you understood what I said previously. These are buyers, these are sellers coming to take over this market. Now, this particular candle is, it has body and it has wick, just as you have your normal candle that you buy from the market. So you have, this is the wick of the candle. And then this is also the wick of the candle. And then this is the body of the candle. Now, that is something you need to pay close attention to. This particular market, for a bearish candle, say this particular candle that you are seeing here, this thing that you are seeing, this body of a candle, is telling us that this market opens here. Now, take note, this market, it opens here. Sorry. This market opens here and it closes here. And it closes here. So the market opens here and it closes here. Now, the reason for this week, it shows that this week, this is the highest level at which, buyers were able to take this market to, this particular place. This is the highest level at which buyers were able to take this market to. I need to put this guy very well so that you understand. This is the highest level at which buyers are able to take this market to. And this particular place is telling us that this is the highest, this is the least level sellers are able to take this market to. So at this point, it was a drag between buyers and sellers. Buyers took it all to this place. Then sellers now pull it back and then took it down to this place. Meanwhile, the market actually opened at this place. But when it opened here, buyers took it all to this place. But sellers now came and they gained momentum over the buyers and they took it down to this place. And at some point, sellers now came again and they also picked the market up to this place. And the market now closed here. So within a 15, so see, let's assume this is a 1 hour candle. Within the 1 hour, this particular candle now closed at this level. Now, the closure of this candle at this level is telling us that the closure of this candle at this particular level is telling us that this market, this particular candle, were actually is actually a struggle. It's actually a struggle between buyers and sellers, right? But it showed that sellers actually overcame the buyers. So the market opened here, it closed here. But this is the high, and then this is the low. And I think I explained that pretty well from the previous explanation. All right. So let me also show you something again. All right, let me show you something again. Let's say this is a green candle. So green candle represent the activities of buyers, remember. But don't mind my don't mind my sketching. It's just for the people's of. I'm actually very good. I'm actually very good in drawing. Yeah, when it comes to drawing, I'm actually very good in drawing. But this is just for the people's of this class, and you know how some of these things can be. All right. So this is the body. Remember, the body is always painted. So these are the bodies, right? So so you have this to be the open of this candle. This is the open of this candle. This is the close of this candle. You know, you need to take note of the open and the close of each candle. The open of a bearish candle is actually at the top, where it closes at the bottom. But the open of a bullish candle, which is a green candle, opens is actually at the bottom and then closes at the top, right? So this is the wick of this candle. And then this is also the wick of this candle. You know what this means? It means that this particular market actually opened here, but sellers took it, at some point, sellers took it down to this level. And when we go to this level, buyers now came with their momentum. They said, no, we can't allow sellers to win over us. Now pick the market, and it's moved the price up to this place. Then the sellers now came again, and they moved the price down to this place. But before they could before they could take any further move, the buyers, the candle, the time for this candle to be formed actually expired. So say, for instance, this is a 1 hour candle. Within a period of 1 hour, all of these activities took place. So this is the wick of the candle, and this candle opened at this place and it closed here. This is the wick of the candle, which is the high, and this is the wick of the candle, which is the low. Well, in this place, this is the opened, this is the closed, this is the low, this is the high. Opened, closed, here's opened, closed, wick, wick, right? So that's that about that with respect to candle, with respect to candlestick. So the next thing I would like us to look at is the trending of market. Now, there is more to candle beyond this. There's more to candle beyond what I just explained here, because each of these candles has their name. This is an inverted hammer. This is a hammer. This is an inverted hammer. If you actually studied Jonathan Walter in Naked Forex, you get to know what are the different names of candle. This is a bearish momentum candle, and it has its interpretation. There is a reason for this particular candle to be called a bearish momentum candle. It is telling us many things in this particular market at the moment. But for the sake of this video, I want to keep this video very short and very valuable. So, and there are a lot of content for us to exhaust. Also, I'll try as much as possible to keep it simple as possible. So there is also what we refer to as trending, market trend. So market trend is actually formed when a candlestick chart is consistently making new highs, new higher lows, it actually make a first new high, then new high low, then new higher low, then new higher high, new higher low, new higher high, continually in that particular regard. So I'm going to explain what I just said so that you can understand what I mean by what I said. So a trending market is a market that prints a high, then a low, a higher high, a higher low, a higher high, a higher low, and a higher high. Now, this is the idea behind trending market. So whenever we see a market moving in this particular manner, we refer this to as a trending market. So a trending market is formed when a candle chart formed a low, a high, a higher low, a lower high, a lower high, a higher low, a higher high, and a higher low. So in that continual regard, this is what we refer to as a trending market. Now, one of the things you want to take note on trending market is the fact that we have what we call the impulsive move and a repulsive move. Impulsive move. This particular move on this particular chart is what we refer to as impulsive move. This is an impulsive move. Well, this is a pullback. So the market, when the market got to this particular level, it pulled back. It's as simple as that. It pulled back to this level. It pulled back. So this is a pullback of the market. This is this is an impulsive move. Well, this is a pullback, and then this is another impulsive move, and then this is a pullback. This is a pullback. I know you know this already. So this is a pullback, right? So it continues like that. Whenever you have an impulsive move, a pullback, impulsive move, and a pullback, it is giving us what we refer to as a trend. It gives us what we refer to as trending market. Now, one thing you need to know about the trending market, again, is the fact that every trending market gives us an opportunity for entry. Actually, let me just say this at this point. Trending market gives us opportunity for entry. So when you have this, you have something like this. Now, this particular trending market we refer to as a bullish trending market, right? A bullish trending market. So we use what we call we use what we call a trend line to spot the different spot on a trending market, right? So here you see this, a low, a high, a higher low, a higher high, higher low continually. So you realize that at every spot of this trending market, the trend line cut across it. This is what we refer to as a trending market. And every next low, every next high of the market, every new high of the market is always above the previous low. Every new high of the market is always above the previous high, right? This is the new high. This is a previous high. So this new high is above. Look at what I mean. If I should put this line here, and then I put this one here. So you realize that this particular guy here is above this. And then this new one also that is formed, this one here is also above this. So every new high is always above the previous high. It's always above the previous high. So let me also delete this so that I also show you something again. And then one thing you also need to take note again is that every new higher high, every new higher low is above the previous lower low. So look at this guy is above this, 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 right? So What else should I show you from here? Okay, there's a way we take advantage of this. So yes, now this is a bullish trending market. We also have a bearish trending market. We also have a bearish trending market. Let me explain that for you. Just as we have a bullish trending market, we also have a bearish trending market. But a bearish trending market is just the flip side of the coin, right? So this is how a bearish trending market is. So here you have a high, you have a low, you have a lower high, you have a lower low, you have a lower high, you have a lower low, you have a lower high, continually to this particular level. So almost the same thing now. So you just flip the coin to the other side and it gives you a typical example, a typical explanation to what it means. So this is actually the impulsive move. Well, this is the pullback or retracement. This is the impulsive move, the pullback, impulsive pullback or retracement. So that's that about that. So, and then the same thing with the bullish trending market. Every previous lower low is above, every new lower low is above the previous higher low, and that, and that, and that. Okay, let me show you an example of this in an active market. Let me show you an example of this in an active market. So this is the market of AC. This is a market of AC. Now just look at this now. Just look at this. You see how this market is trending here now. This market, we have a high here. We have a low. So we have a low here. We have a high. Then we have a low here. We have a high. We have a low, a lower low, a new higher high. Sorry, a new lower high, a new lower low, and a new higher lower high, continually like that, right? So if you look at this market, it continues in that manner. So here we have a high, we have a new high, we have a new low, we have a new higher high, a new lower high, a new lower low, a new lower high, a new lower low, continually in that manner. And that explains what I was trying to explain to us the previous time. So, and then as I said earlier, every trending market, or let's just nosedive into the concept of support and resistance. What is support and resistance? Now, support and resistance, they are actually areas in the market that price is likely to react. That's the area of your supply and demand, place where market has shown a previous activity of buyers taking over trade from sellers, and then a place where sellers taking over trade or taking over market from buyers. So wherever buyers take over trade from sellers and sellers take over trade from buyers, there is always something that is printed on those levels. So we refer those levels as support and resistance. And I'm going to show us that in a short time, in the shortest time possible. So here now, if you have a market that is moving in this level, a market that is moving in this level. Now, on this, I would also like to show you what we refer to as a consolidating market. Now, a consolidating market is a market that is consolidating, just a literal meaning. A consolidating market is a market of indecision. Buyers are neither taking over the market nor sellers are taking over the market. So buyers take the market to a particular price, sellers took the market to a particular price. So it keeps ranging within those levels of the market, printing support and resistance, supply and demand. So here you have this level. Now we refer to as a resistance level. So resistance level is that level where sellers constantly gets to and push the market down. And then support level is that level where buyers come and gain strength over the market. So these levels, they are support levels. So you realize that the market, whenever market comes to this place, sellers, buyers takes it to this place. Whenever market comes to this place, buyers take it to this place, like that. So we refer this level as support level. Well, this level here we refer to as resistance level. So how do I identify support and resistance level on a trending market? Now, this will also take me to that point where I explain to us the different form of how to take advantage of a trending market and support and resistance level to take an entry, to take a position, either to go short or to go long. To go short simply means you are selling in that market. You are part of the sellers that are selling in that market, only to be a retail seller. And you go long simply means you're actually buying in the market. So now from one thing I also want you to know real quick is the fact that market will always buy at the previous resistance. Market tends to buy, not will always, okay? Let me reshuffle my statement. Market tends to buy the previous resistance and tends to sell at the previous support. Market tends to buy the previous resistance and tend to sell at the previous support. So let me explain what I just mean from what I just said. I said market tends to buy. I'm trying to look for the lines I drew the other time. Okay, I think that was EG or GG rather. So from this particular market here now, I think I drew some line here previously. So let me just, good. Now, this is a resistance. Sorry. So now, this particular market, you notice that this is a resistance level, right? This is a resistance level. This is a resistance level. This level is a support level. So if I want to take a position, if I want to go long, I'm looking at a trending market because you don't want to trade against the trend. One key thing, you want to write this down. Don't ever trade against the trend until the trend bends. Don't ever trade against the trend until the trade bends, because if you trade against the trend, you are trying to sustain injury for yourself. So whenever you spot a trending market, and I've shown you how to spot a trending market, you spot a trending market and you're able to draw your trend line. One of the things you want to do is to look for an entry. So because this market got to this level, I expect it to pull back. There is an impulsive move. I'm waiting for a pullback. So you want to wait for, after spotting 1, 2, 3 level of pullback or of a trend in this particular market, what you want to look out for is the next possible pullback that will give you your buy confirmation. So now look at this is the first high, and then when market got to this particular level, it now began to buy. Now, this particular level was actually a resistance level. It now became a support level when it got to this level. So I said market tends to buy at the previous resistance. So this was the previous resistance. And when it got to this place, market now reacted. Sellers now took over the market. Buyers now took over the market and sold it and bought it to this particular level. Are we good? All right. So market tends to buy at the previous resistance. Now, let's just look at this again. When it got to this place, look at this impulsive move. You don't want to take this trade here. Just wait for it to retrace or wait for it to bounce back. Sorry, wait for it to pull back. When it pulled back to this level, you are now waiting for it to hit this particular resistance level, and it now gives you a good entry point for a buy. So when you spot a market, a trending market, you want to chart it. After putting on your trend line, you just spot your supports. If it is an uptrend, just draw your resistance levels. Draw your resistance level, and your resistance level will now become your previous resistance level will turn to the future support level, and the every previous resistance level will turn to a next support level, right? We also have something here. We also have something here. Is that good enough? So now just look at when this market got here, it began to buy to this level. So let me clean this line and show us something. If I'm going to be taking this market, right? Say I'm an intraday trader. If I want to take this market, I will draw my position line based on my risk and reward. So I know that if this market comes to this, it's going to buy. So I'll just, if I take a buy here, now this is what I'm going to do. I'm going to put my exit point here. That's my take profit. My take profit would be at this particular level here. Okay, let me extend it to the left. Okay, it's not working. So it will be at this particular level here, right? Now this level, let me draw this resistance. So I'm not going to take it necessarily to the top, but I'll just put it here, just at this level, and then my stop loss, because I want to keep a very tight stop loss, it will just be a little bit below the resistance, this previous resistance, which has now turned to a support level, and boom, my entry is set. So that's the same thing we also do for a downtrend, a market that is trending downward. I think I also have something here like that. So let's just go to the chart and explain what I'm trying to say using a downtrend, for instance. So this is a downtrend. So the first thing I want to do is to just spot out my resistance level. This is my trend line. This is my trend line. Since it's a downtrend, it means what I'm looking for from this market, right? At times you might not have your perfect. So before this market should break this level, it was actually previously like this, right? So let's just use the first two. And then this particular market also began a trend line here. It began a new trend line here, right? So continually like that. So let's just look at this particular trend line. When this market got here, this is the resistance, this is the level it printed, and I'm looking for a buy, right? So when it got to this place, this is what happened. And when this market got to this place, this is what happened. So while this market got to this place, what I'm expecting this market to do is a pullback. When it broke this, I'm waiting for a pullback, and this pullback should be around this region. So the moment this market comes to this region, of course, you use other confluences. You could use Fibonacci and all of that. So when it got to this level, it is telling me that the market is about to sell. So what I'm going to do now is to trigger a sell, place a short position, and wait for this market, set my target, my TP, my stop loss, and all of that. When it gets to this place, boom, it has hit my TP. So market tends to buy the previous resistance and sell at the previous support. So this was a previous support. It now turned to a resistance. Previous support turned to a resistance. And this resistance is telling us that this is a point to trigger a sell. Of course, one of the things we also want to do is to wait for a candlestick confirmation. Let the next candle that is going to form on that market within that level should give you a confirmation. Maybe my next video, what I'm going to do is to teach you what we refer to as confluences, or confluence zones, right? Places where market tends to react. Market tends to react at every definite levels, or we could also refer it to as psychological level. Those levels that market tends to react at every point it gets there. So that's that about that. So with this, you should be able to understand what a candlestick is and what a trending market is, either a bearish trending market or a bullish trending market. And then you should also be able to understand support and resistance level, how to take advantage of support and resistance level to enter a trade and to exit a trade. Okay, let's go to the previous trade and see how we can be able to say, for instance, this particular market now at this place, right? This was a previous resistance. So look at how this market moved. When it got to this level, it now pulled back, and then it came and bought at this level. You see this now? It came and bought at this level. So if you had bought this market at this level, look at where you would have. Look at the kind of profit you would have made. So let's just see how much would you have made if you actually bought this market from here. So you will have had 280 pips. 280 pips. That is massive. Just using your support and resistance and your trend line strategy. Support, resistance, spotting a buy opportunity in an uptrend market, and then you look at your exit plan, set it very well with respect to your risk and reward management, and you hit the market real hard. So guys, the purpose of this video is just to give you a very brief and concise details on how the market moves, the basic idea behind technical analysis. Technical analysis is all about price action and many other confluences in order to draw a trade decision, a trade idea to give you your entry and your exit on every market. So please, if you got value in on this video, hit the like button and click on the subscribe button, turn on the notification button in order to make this video go viral so that people who want to learn Forex can also take advantage of this brief and concise knowledge to add to their market Forex knowledge. See you on my next video where I give back-to-back knowledge on how to analyze the market technically and come out profitable. There's a difference between an amateur and a professional. The difference between an amateur and a professional is the fact that a professional always come out with blues every single closing day of a trading market. He might have some losses, but his wins are always more than his losses. And that's simply because he's able to take advantage of certain analysis in the market to bring out a concise trading idea. So see you on my next video, and I hope I wish you a very profitable trading journey. Bye for now.